Welcome to the August 14th, 2023 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with your weekly fast-paced tour of the global financial markets. I'm President, McGowan Group Wealth Management, a team of 10 serving affluent families right from the Crescent in Dallas. Come on down and get your office tour or set your time for a Zoom meeting. Simply go to NetWorthRadio.com. This week, surprises of 2023 just sneaking up all over the place. Now, the first thing I'll cover is economic growth right now. 5 quarters in a row. You should be a subscriber because my subscribers started hearing this a year ago, and that was learned economists, the blue chip consensus for what the economy is going to do, started this quarter again for the 5th quarter in a row with a projected recession. But what actually happened? And for the 5th quarter in a row, the Atlanta Fed, they have the best measure of what is economic growth right now. They go all over the country, scour the nation's data, and they give a read on current economic growth. Well, here we are 6 weeks into the quarter. And what did they say? 4.1% economic growth. 5th quarter in a row, all those blue chip economists were wrong. And that looming recession, at least at the current time, it's wrong. Now, most people would say that should cause inflation to skyrocket because you got economic growth. People are happy, they're getting jobs. But what happened? In July and in June, 0.2%. Multiply 0.2 times 12, you get 2.4%. Inflation below 2.5%. What is the 110-year average for inflation? I'll wait for it. 3.3%. And it's 3.3% over any reasonably long time period in that data sequence back to 1913. Inflation below average. Inflation for producers, even though there's wage growth, inflation just 0.8% over the past year. That means that the Fed has room to start cutting those rates, and they're projected to, between here and 2026, raising the net present value of high cash flow assets. Here we go. What is this? Well, oil and gas infrastructure, those are high cash flow assets. And we were stuck at $70 a barrel. This is since the beginning of the year. You can see this plunge with the banking crisis. And I'm going to get to the banking crisis. In case you were wondering what happened to that thing, I'll show you. Anyway, look at this. $70 a barrel is kind of a floor. And the Biden administration said they were going to fill back up the Strategic Petroleum Reserve at 70. Whoops, they missed this. They missed this, they missed the, whoa, what happened there? On my birthday, June 28, oil started to rally. That's good because I have a good energy infrastructure position. And oil went almost to 85 this week, breaking out above the most recent high. That's a technical breakout, and it tends to bring in trading money because you do have a technical breakout. Well, what's happening here? There's a projection by OPEC that we will be 2 million barrels a day short. And there's other analysts who have said that too. So as we begin 2024 and start next year, we could be 2 million barrels a day global shortfall in production. Inventories correspond to this huge drawdown. The inventories could reach an 8-year low according to other analysis from Standard Charter. Well, and this is the drawdown of the crude inventories. So when they fill those back up, well, how do they do it? They have to buy. Now, this is natural gas. It woke up this week, a 40% spike in European natural gas prices. This is the time of year that they fill up the reserves, and of course Europe now using lots of LNG from the United States. That giant sucking sound out of Louisiana, that's liquid natural gas. And Corpus Christi Bay, the pipelines are full due to exportation of oil and gas. So the pipelines are making a fortune near Corpus Christi. Remember that banking crisis? There were 4 California-based venture capital banks that failed. Why? The venture capital market completely dried up, and companies that were burning cash couldn't get any more cash, and there's less cash in the bank, and everybody ran in circles, screaming, shout, and took their money out. But it was limited, and they pounded all of the regional banks here in Texas. Frost, Dallas-based Comerica, and Texas Capital Bank. They got pounded too. What happened here? This is the last 90 days, top 10, bottom 10 in the blue chip S&P 500. Who performed the best? Zions Bank Corp. Here's Dallas-based Comerica, up 59% in 90 days. That doesn't sound like a banking crisis, does it? And so what you have, U.S. Bank Corp up 36%. So 3 of the top 10 are actually the regional banks bouncing back because it was an isolated crisis. And that's why you should subscribe, because we told you that here back when we got into April. We said, no, this is not a contagion like 2008. This is a bunch of California fancy banks that didn't make it. Here we go. Halliburton. 44% this in the last 90 days. The energy bounce back is clear here. The worst performer, Advanced Auto Parts, and Etsy is a minus 20%. They made the list. The old COVID stocks, Moderna, down 21%. And contrast that with the stocks that spiked 17% this week, Novo Nordisk and Eli Lilly. The medical dividends did extremely well. The ones that are not dependent on COVID, they're blasting ahead because they have the new diabetes drug that causes weight loss. And now the study shows that if you lose weight, then you're less likely to have a heart attack. And that news spiked both of those stocks. Here is global high yield. So we had 18 months of torture from the Fed raising the rates. The value of well-managed bond portfolios declined as the comparison rate went up, right? If you can get 5% in the Vanguard money market, that sounds good. Maybe you wouldn't want to do a bond fund. So they went to a 75 cents on the dollar, a 25% drawdown in the value of their loans and bonds. But bonds come due at par, and they tend to go back to par when you take the pressure off. You can see it right here in 2008, the fast recovery. Wow, that's huge. And you got to compound 9.5% over 35 years. And you could see these periods when it gets pounded and the way it bounced back. This is COVID right here. Well, this is the Fed tightening. And now things are starting to go back to par value for the bond funds because that's equilibrium, and that's where we plan to take capital gain from that category. So we've covered 3 good categories that are in our managed accounts, and that is energy infrastructure, medical dividends, and global high yield well-managed bond funds. I'm Spencer McGowan, President, McGowan Group Wealth Management. Come see us or set your time for a Zoom by going to networthradio.com. Contact us there. We look forward to upgrading your plan for 2024. Thank you for tuning in to Net Worth Media today. And our efforts over the past 2 decades to educate clients and help clients make great decisions, that's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.